Here's something to consider. The swift rise of AI has already shifted the manufacturing landscape. Our chief equity strategist and economist, John Blank, says that structural shift has major implications for jobs, for products, and of course for stocks. He's here with me now. John, how is AI shifting the U.S. manufacturing landscape?
Hey, Terry, we need to step back and realize, that the tariffing in the United States did happen, even though people somehow forget about it as the tariff transfer is behind us. But those tariffs are in place, and it did shock and raise costs for manufacturers. On top of that, we've had the oil shock, and that has also raised prices. So a lot of what you're seeing in the bump up of PMIs in manufacturing is this squeeze in prices on manufacturers. So in the midst of this scenario where prices and margins are being squeezed, we had AI come along and actually offer a incremental improvement. I don't want to get into the games of euphoria over AI and say it does everything, but for the manufacturer who has solutions and some ability, say for sourcing more effectively or doing prototypes more efficiently, AI has been a modest solution for this business. So there is somewhat of a high technology, high productivity angle to playing manufacturing now that seems to be real.
So, is that where this evidence shows up in the PMI data? Is that the specific data that it shows up in?
No, it shows actually in the sub indices, Terry. I think the high end of the PMI data is actually just the price explosion that has happened to them that gets baked into the top number. But if you look into the orders and the order book and the types of companies that are selling things, particularly companies that are selling into these data centers that are being built. Some of these manufacturing groups, particular, I heard about Modine Manufacturing being one of these groups that has pivoted into the AI construction trade. There can be actually some fairly strong performancers.
Should we be concerned by this?
Not in the United States context. I mean, most manufacturing is done in China and other places. So that's another angle to this is that the AI manufacturing shift is actually also has a global component and a very China specific one. The Chinese are certainly on top of this, and there's going to be developments that wrap AI into manufacturing that come out of China or being used by China. And that's another whole level to this conflict we have with them.
So, in light of this, what's the current state of manufacturing here in this country?
Terry, it's decent. I mean, I'm looking at ticker ABB. It's in the manufacturing electronics business, and it's a top 44% stock in our system. So that just tells you something that it's not a situation where the manufacturing companies, even though this is a big conglomerate, global conglomerate, is actually suffering.
Yeah, we'll talk about more about that stock later in the podcast. What about the manufacturing labor force here?
Well, the labor force in the United States is relatively stable, and it's people are actually struggling to find workers in the United States because they need the workers who are not just people who can do the heavy lifting and stuff like that, but can also adapt to working with this very sophisticated equipment that embeds these types of programs and runs these types of sophisticated assembly lines and so on. So it's becoming a different kind of worker, and they can't find that person very easily.
What does this all do to the outlook for growth in manufacturing?
I think it's stabilizing the tariff. I don't think it sets off a fire because the tariffing and the pricing and the global shock are, the headwinds to it. But it puts a tailwind up against the headwinds and make it somewhat less dire of a situation for these groups.
The bottom line then seems to be the manufacturing sector is technologically advanced. Is there a reason for optimism going forward?
Yeah, I think so, Terry. I think these systems are going to get tested and embedded, and they're going to start to, over time, learn to use them and get the efficiencies they're looking for. I think it's oversold short term, but I think over longer term period, the manufacturing sector, because it is physical and material, can actually be one of the sources of benefit from this.
What about U.S. manufacturing versus global manufacturing?
I think, Terry, there we're going to see a splitting of things because I think the Chinese are going to head one way and everybody else is going to head their own way. So I think in the global sense, it's going to be China, just like the batteries, just like the electric vehicles, just like everything. They're going to have a cost advantage and a technology advantage that are going to work in together.
How does this impact manufacturing stocks then, especially in light of the fact that in Q1 2026, 50% of S&P 500 earnings growth comes from two supply constrained AI chip companies, NVIDIA and Micron.
Right. So we got to remind ourselves that chips themselves are manufactured, Terry. So NVIDIA and Micron are manufacturers. They're manufacturers of chips and memory chips and the big sophisticated AI chips, the Blackwells of NVIDIA. So this supply chain particularly goes back to Taiwan. And in fact, we're hearing more and more about co-location of NVIDIA in Taiwan because of that manufacturing bit. So keep in mind when you're talking manufacturing, don't just think about making Caterpillar trucks. Think about it making semiconductor chips.
All right, let's take a closer look at those two chip companies, NVIDIA, especially as it took the earnings spotlight this past Q1 earnings season, and Micron. And then we'll add in a stock you mentioned earlier, ABB.
Yeah, so NVIDIA, of course, we're going to talk about it. It's $200 a share. It's interesting, Terry, here is that the forward PE is only 25 now, which is, they're looking for $11.40 in earnings next year. I do see 4% upside revisions of the last 60 days on this year's earnings and 7.5% next year. But that's not as strong as it used to be, Terry. So what's happening here is people are looking past NVIDIA in some respects, and they're asking, they're questioning the astronomical growth, these 75 and 8% growth, and saying, the PE ratio in a forward context like this tells you where the market really thinks growth is, which is 25% annual growth. Nothing to sneeze at, Terry. That's really excellent, but it's much lower than what people are talking about. Micron Technologies. I mean, Terry, let's talk about this stock. Early 2025, even mid 2025, you could have bought it for $100 a share. $928 a share, $100 in earnings they think next year. If they think $58 in earnings this year and $100 next year, that is such a massive number. I think, again, we should be very skeptical of that. And of course, the PE ratio is 15.75. So the market is skeptical of this. But nonetheless, this stock became $1 trillion stock. It's $1.05 trillion. And I'm certainly a seller, not a buyer, but it made Micron a lot of wealthy shareholders out there who are very happy about this stock. We've got to mention it, but if you're learning about it on this podcast, don't go out and buy it. You're too late.
And then let's add in that leading technology company, ABB.
Yeah, so ABB, this is automated manufacturing we're talking about, digital solutions for the electrification of industry and transport and enhancing productivity. So this is the type of thing that we're talking about, Terry, all the way back to what this podcast is about. And again, you could have bought this for $55 a share in early 2025. It's now $110 a share, and its target price is $122. So again, if you're listening to this podcast, it's probably a little too late to play ABB. But keep it in mind that, again, you've got 12% growth in earnings this year and 4% growth next year. That's supporting this case that there's real benefits in the manufacturing space for this period of time.
All right, our chief equity strategist and economist, John Blank, on the shifting U.S. manufacturing landscape. With John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.